Hi there, welcome to Kneppyinvests. Just before the start of the new financial year, I asked the viewers of this channel to give me their favourite companies on the ASX that they do think will outperform the market over the next 5 years. I collated the results and came up with this hypothetical group portfolio of 25 companies on the ASX. And in my opinion, this group portfolio will outperform the market over the next 5 years, and I'll be tracking the performance during that time period. Today, I'm going to give you the first update. I'm not going to give this frequent of updates, so we've only been trading for 7 days. However, I really want to do this update because it's been an absolute stellar start to the financial year, particularly when you compare it to the market. In fact, the market is down a fair bit in those 7 days, yet the group follow is up a fair bit. I'm also going to be discussing my own 2 personal portfolios, and that's another reason I want to do this video, because my personal portfolios are also significantly outperforming the market. So let's get stuck into it and see how the general market has performed since the start of the financial year. To track the market, I'm going to be using the XJO, which is the ASX 200 companies. It's probably one of the most popular sort of ETFs you could put your money into. That's sort of ETF that does track the top 200 companies. On the July 1st, the XJO opened at 7,313. And at end of closing on July 9, we saw it down 7,273.3. And that means overall, the market, or the XJO, is down 0.54%. It could have been down a little bit more, because on the Friday it was down something like 1.5% and finished the day only down 0.9%. More than likely because futures in the overseas markets were up. We did see a good Friday trading in those overseas markets. So more than likely we will see the domestic exchanges up on Monday, unless we do see overseas futures down a fair bit. Over the past, we'll say 3 weeks or so, the market is generally trading sideways, but if you go back a previous month before that, we did see a nice little uplift in the XJO, or the Australian market. So right now we are seeing a consolidation in the XJO, and this is a very healthy consolidation because we did have that run up. What we've been seeing in this uptrend of the Australian markets ever since the start of the calendar year is every single time the market gets towards the 50-day exponential moving average, which is the bottom black line. So I have 3 moving averages here, the 10, 20, and 50-day exponential moving average. Every single time we do see the XJO get towards that 50-day moving average, it bounces off it. So that was the first time, reached way back in February. We saw it move and stay around that 50-day moving average for about a month in March or so, and then we saw it rally once it lifted above a bit of a resistance level at around 6,800, and then again it reached the 50-day moving average in May, and right on Friday it got very close to the 50-day moving average and then bounced off it during the day. So this just tells us that that 50-day moving average is a level of support. If we see the XJO move well below that, that could be a sign of a short-term correction. I am, in the short to even medium term, I am bullish on the markets around the world just because of what's happening with the governments and the reserve banks. But in the long run, all this helping or propping up the assets around the world will eventually come to bite us. And I do think, because a lot of assets around the world are significantly overvalued, I think we will see a major correction, in fact a long-term correction. What we saw in 2020, March 2020, was just a flash crash. It wasn't a real correction. That was a significant drop, a very quick drop, and then a fairly quickly recovery. I think when we do go through a correction in the future, it's going to be a long drawn-out one, similar to what we saw in the GFC. But that, who knows when that's going to happen? I'm not a forecaster. It's hard to predict those until they start happening. Saying I don't forecast the future is actually a little bit wrong, because I am an economist and a meteorologist, And in both those fields, we do try to forecast the future. We have way more success in meteorology. In fact, that's my day job. Well, not day job, I'm a shift worker, but most shifts I am working, I am trying to forecast the future. And we are right most of the time. So don't believe society when it says weathermen or weather people can't forecast the weather. We can. Society is just lying to you. In fact, today the forecast is for sunny weather. Fine weather, it is fine weather today. In fact, we can forecast fine weather at an almost 100% success rate. And in economics, we also try to forecast the future there. The success rate in economic forecasting is much less than meteorology or when it comes to the weather. Now on to the most important part, the whole reason you're watching this video. How did the group portfolio perform in the last 7 trading days? Well, the whole reason I'm doing this video is because I just want to point out how stellar this group portfolio has performed over the market. So the market's down 0.5%, or the XGO. The group portfolio is up 1.4%. Of course, because this is a diversified portfolio, not every single company has done well. The best performing companies have been A2 Milk, up 20%, which is not a big surprise. I did a video, I think, just before the start of the new financial year, and I did look at that point in time that the sentiment in this company has taken a turn for the better, and it really has paid off in the last 7 trading days. Tesla released some good news just prior to the start of the new financial year, and that's my favorite sort of trade, is when you buy into a company that's released some good news just after it's been in a downtrend and a little period of consolidation. It does look like Tesla might have started a new uptrend. The next performing company was Province Resources, up 11.5%. We've also seen Zip up 9.6%. I do think, if I remember correctly, one of the trading days, Zip was up something like 13%. Lake Resources up 9%, email payments up 8.6%. So a lot of green there, and high green at that. But not every company has performed well during the last 7 days. The most interesting company that has underperformed is Megaport, down 11%. Now, in saying that, this is a company I don't own in my own personal portfolios, but I have been looking at this company for quite a while. I do think they have some very interesting long-term potential, and I am possibly looking at adding this company eventually to one of my portfolios. Ascidian down 10%, Aries Resources down 7.7%, and BrainChip down 6%. This group portfolio is the very definition of a passive portfolio. We won't be changing any companies in this, won't be selling or adding to it. And just following through some things I've heard in the past about old men who have just died, and their descendants have just found they've bought some companies 50 years ago and they're now multi-millionaires, and they didn't even know it just because they've held these companies for a long time and never sold out. So this is the sort of philosophy we're using with this group portfolio. Buy a group of companies and just hold it for as long as possible. Although the group portfolio is the very definition of a passive sort of strategy, I just want to see how that sort of strategy, passive strategy, performs against a more active strategy. And one of my portfolios does follow a way more active strategy, and that is short-term sentiment portfolio. So companies in this will be traded in and out quite frequently. In fact, most of these companies I don't think I'll own for more than a year unless the share price keeps going up. And ideally, I would like to see that happen as well. So I will make quite a few more active decisions here. And during the last 7 days, I have made one disposal, and that was Pact Group. I bought this company quite a while ago. It does look like the share price is now in the downtrend, so I'm happy to sell that company because I did want to make a purchase of another company, which was Atomos, and I made that purchase the day I disposed of Pact Group. I did make a mistake. I included one company in both portfolios, and that was Sequoia, but I wanted that in my long-term buy and hold strategy. That is a company I believe is cheap. I believe the share price can continue to go up for a fair while longer. It wouldn't be a miss in this portfolio, but if I do see the share price go into a short-term downtrend, I don't want to sell out of that company because it is cheap. And the whole reason I will buy that company, or I bought that company, was because it is growing and it is cheap. Because of that mistake, I decided to purchase A2 Milk on the 1st of July at $6.08. And that was one of the best performing companies in this portfolio, just shy of 2 other companies, which was Tesseract and Phoenix Group. So Tesseract is a cybersecurity company, and Phoenix is a small cap iron producer. Both of those companies up around 19% or so, and A2 Milk was just under 18.5%. Worst performing companies, Appendix Group down 9%, and Aries Resources down 7.7%. Overall, this portfolio did, just like the group portfolio, outperform the market, up 0.9%. So quite happy with the performance of this portfolio as well. Forgot to mention, I do have $1,806 of cash. That's because when I dispose of Pack Group, the amount of money I got from that disposal, I didn't want to put that cash into Atomos. So I do have $1,800 left over, which I don't mind having some cash because that does give me some flexibility in the future. Onto my personal long-term buy and hold portfolio. These are companies I think have a long-term future. Most of these companies will be operational cash flow positive. That's one thing I look for. Not all of them are, but most of them are. In fact, I did have or write down which companies are operational cash flow positive. For example, EOL is, Glentrack, Spectre Group is not, but it's a market cap of $7.8 million and very nearly operational cash flow positive. Lexium is not. MSG or MS Services, market cap 11.2 million, and it has operating cash flow of 2.2 million, so quite cheap. And a lot of these other companies, I won't go through more, are operational cash flow positive or have a fair bit of revenue. For example, EOS Systems have $180 million of revenue, operational cash flow negative, but they will become operational cash flow positive soon. So that's one of the main criteria I do use, is finding companies I do think have long-term potential and have either become operational cash flow positive or are close to it. Now, one company I did not include in this was A2 Milk. That is my largest holding. In fact, if I did include A2 Milk in this, it would have been 20% of the portfolio, and I didn't want that. I wanted a little bit more diversification. I've also not included some other companies I do have in my personal holdings, particularly, I think I have a few ETFs I've not included in this. Nitro Software, I did not include this for some reason. I think that was just a slip of memory. And quite a few mining services company I've not included in this portfolio as well, and A2 Milk. What I've decided is quite a few companies in this portfolio I don't own. I think about 5. So Beam, Superloop, PayGroup, and Revasum I actually do not own in my own personal portfolios, but I've just included that because I do like these companies and I am looking at buying into those companies in the future. I did make one disposal, and that was Cirrus. In fact, I didn't own Cirrus. That was another company I didn't own, but I was looking at purchasing. In fact, I did put a bid in for Cirrus, and then they released some negative news to the market, and I withdrew my bid when they released that. And that's okay because a few days later, I decided to buy XF1. I did a video on that. That company is operational cash flow positive now, $2.5 million for the quarter. The first company to release their Appendix 4C for the current quarter, or the June quarter anyway. Now, this is another reason why I want to do this video, because this portfolio has significantly outperformed the market, up 3.7% over the past 7 days. And a bit of surprise, well, I shouldn't say surprise, because we have a very small sample size, only 7 days. The whole point of this is to see how these portfolios perform over the long term. So you can't look at 7 days and extrapolate that over 5 years. At this point in time, the performance of this portfolio up 3.7% when the overall market is down 0.5%. And I did not include my best performing company, which was A2 Milk. In fact, if I included A2 Milk in this portfolio, my long-term buy and hold portfolio would have been up about 7.5%. Best performing companies during the 7 days, AVA Group up almost 20%, $1,293. A lot of companies up more than 10%. EnviroSuite, MyDeal, Sequoia, PayGroup, and Revasum. And not a lot of bad performance in this. Australian Broadband only down 5.8%, and BrainChip only down 6%. But you can see BrainChip, I only have $2,000 in that company. So BrainChip, which is probably my most concept stock I have. I have a very small holding in that. Same thing with Pointera, which I do think is quite expensive. I have a very small holding in that as well. My largest holding by far is AVA Group, which is now almost at $8,000 and rising. Hopefully that will rise a fair bit from there. And Zip Group might be the next biggest holding, and I've held that for quite a while, and that has grown through the last few years as well. Now on to the performance of the benchmark, which is the XJO versus the three portfolios. And we can see significant outperformance of the portfolios against the benchmark, all green, all up. Group up 1.4%, short-term sentiment up 0.9%, and long-term buy and hold up 3.7%, when the overall market is down 0.5%. This is, of course, over a very small sample size, 7 trading days. The whole year is probably something like 260 trading days or something like that. It wouldn't be that. Yeah, 250, probably 240 trading days. And this whole exercise is 5 years. So we're looking at about 1,000 trading days or even more than that. So we're looking at less than 1% of trading over the period I want to judge the performance of the portfolios against the benchmark. So a very small sample size, but to have significant outperformance at this point in time is a good thing. Don't expect outperformance throughout the whole period. More than likely, we'll see periods of time when the benchmark will outperform the portfolios, particularly when you see the banks go on a run. They make up a major part of the XJO, and so when they go for a run, more than likely the portfolio's performance will underperform the benchmark. That is all I have for this performance update of the group portfolio and my 2 own personal portfolios. If you have any questions about anything, make sure you leave it in the comment section of this video, and eventually I'll get to answer it. Fortunately, I do have about a month and a half of leave coming up, which coincides, not coincidentally, with the end of Appendix 4C month and all of reporting season in August. That was planned to cover that whole period. I want that whole period off my main work so I can focus on other stuff like doing these videos and seeing how companies are performing. So if I do have a lot of comments to answer during that period, I make sure I'll get through them during that time. Otherwise, I'm not a financial advisor, so if you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's all for this video. Have a good day. Bye.